What is up, guys? It's John here with Option Lab. In this video, I'm going to be talking about how I plan to make just about 7,000 on RH or Restoration Hardware in about 2 weeks. I'm going to break down the trade that I took. I'm going to break down each individual part on this spreadsheet so you guys can understand each part individually, as well as go through my account live to show you guys exactly what I did. So let's hop into this. If you guys are not yet familiar with who I am, my name is John. I did about 2.2 million in 2024 trading option selling strategies, things like cash secured puts, credit spreads, debit spreads, etc. I track all my trades live on a massive spreadsheet, and if you have not yet already, click the link in the description to join my free Discord Option Lab. The first 10 people to join and send me the word print on Discord, I'm sending a 1-day free trial to see my trades. I've been talking to a bunch of you guys who've been doing well. Also, I'm going to send you guys my option selling cheat sheet that explains the strategies that I'm about to break down today. Okay, so let's first actually look at this spreadsheet that I made. Let me zoom in here so you guys can see it better. And let me move myself out of the way here, make it a little smaller. Okay, so let's look at what I actually did first. So the first thing I did on RH was this trade right here. So let's look actually right in my account here. So right here on 4/2, which was about 10 days ago, you can see here I bought 500 shares of RH at 186.50. And if we look on the chart, that was literally right after earnings. So this move right here, this was earnings right there. And that's where we saw a huge drop from around 250 all the way down to 123. I actually got in a little too early. I tend to jump on these big moves down sometimes too quickly. However, I got in around 186 at 186.50. And then let's see what I did. So first thing that happened was, as you can see, it dropped more, right? So the news of the earnings plus the tariffs were just bad news for RH. And the guidance really wasn't too bad on RH, but the tariffs really hurt things and kind of sent it for a second leg down. But now I owned 500 at 186.50, and the next step was to wait for a bounce, right? Because if you guys are not familiar with what I trade what's called the wheel strategy, which is waiting for a stock to drop, essentially, selling cash secured puts, getting that stock at a discount, and then writing covered calls as the stock bounces. So as you can see here, the stock starts to bounce. So what did I do? I wrote the 187.50 covered calls on RH, 5 of them, for around $3,200. Very good premium, and it was looking hopeful that I was going to actually get out of this and make a quick profit. So then what I ended up doing was deciding to do what would be almost like a half strangle in this situation, right? So I liked how RH was moving. I liked the price it was at, and I looked at the option premium for the 120s and saw that it was good, right? So what I ended up doing next was writing more cash secured puts while I also had covered calls out there. So let's break down what this looks like. So let me kind of like put this in steps. So step one was I bought the stock, right? So I apologize if this is bad handwriting. I'm using a mouse. So I bought the stock, and step two, I waited for it to bounce and I wrote covered calls. And since the option premium was so good and the tariffs were causing so much volatility, the volatility was juicing up option premiums, I also wrote cash secured puts. More cash secured puts. So what ended up happening is a scenario like this. And let me see if I can get rid of this. I don't know if I can get rid of these drawings right now. But anyhow, let's see what this actually looks like on the chart. So I had shares around 186, right? So this is, say, 186. Then the stock started to bounce over my strike, and I wrote covered calls, right? -5 covered calls here. And then in addition, as the stock started coming back down below my strike, I wrote more cash secured puts down here below the low, right? So I not only was I making money from the initial option premium of selling the puts, the covered calls to cover the shares that I purchased. I also wrote more cash secured puts below the low to get more option premium and take advantage of the volatility and the high option premium. So we first bought the stock, second sold covered calls. Then the stock came back down below my strike again. I wrote more cash secured puts down below the low. And then in my other account, I also wrote more puts at 128. So just an option premium, I collected about 6,500. Now, if you notice, since I wrote the 187.50 calls and I bought the stock at 186.50, I can then flip the stock. And I'm sorry, this should actually say 187.50, right? Because if I lose, if RH ends above 187.50, I would sell it at that price and profit 1 point per share, $500. And if you add up all that option premium plus the amount that I'd make from flipping the stock for a point higher, it's about $7,000 in profit. That is very solid. So the thought process behind this trade is very simple. Capitalize on a quick drop from earnings and tariffs by writing far out of the money cash secured puts on RH. If assigned, get the shares on what feels to be a discount or an overextension to the downside. Quickly then write out of the money calls on RH if possible. Make money from the call premium plus flipping the stock. And this is outlines exactly what I did. So if you guys want to see, this is my account. These are the trades I took. And if you did find this video helpful and you want to see trades like this live every single day, hop in my free Discord, the Option Lab. Send me a DM. I've been talking to a bunch of you guys individually, and see you guys there, and I'll see you in the next one. Peace.